presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a great night, folks. Don't make assumptions. Ask for what you want. This is a great card. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 29, Nasdaq up 68, S&P's up 16.5. Gold contract flat, $25.50 an ounce. We have silver up 7 cents, $30.02 an ounce. Late sweet crude off $1.14. Trading out at $72.03 a barrel. Notes and bonds, they are on the move. You got the 10-year note up 9 ticks, trading 113.27. The 30-year up, that's up 9 ticks at 113.27. The 30-year is up 13 ticks at 125.09. And King Dollar's down, trading down 340 ticks at 101. Check it out, man. 101. You get the euro out here at 111. We have the yen trading 144 and the British pound at 130 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the NQs, let's take a look at them. We're going to go to the NQs first, because what you have here, you get a high volume low that I expect is going to get tested here. So we take a look at it. What you're going to see, this high volume low is just sticking out like a sore thumb. What we had earlier, the bottom line is that you had volume all the way up to this 981, but you had that test that came about 40 minutes ago and just couldn't handle it. That was 11,000 contracts versus 32. Now, we had a high volume low that also tested another high volume low. Okay, that being said, we've already broke into that area, though. So when you break into that area, higher probability goes that we're going to come down into this 19,771 area inside of the NQs. And the NQs right now are trading at 19,871. We go into the E-minis. We take a look at the E-minis out here. What we have with the E-minis right now, you're at 14. I'm going to put this intraday also. And the market was basically up slightly. Then the Fed minutes come out. The market popped a good 10 S&P points. That being said, we take a look at the E-mini. It's the same type of setup, meaning that we get this low that's hanging out here at 56.13. Right now, you're at 56.34. And I do expect we're going to see that baby get hit. The last 10-minute buy, you just had some volume on that baby. On the way down, it was 23,000 contracts. The lows that we're talking about there has 31,000 contracts. We go into the gold. What gold did out here today, folks, gold rejected lower price. This one's higher price. This one's the 2,900 area. Right now, we're 25.50. And if we do look at this intraday, you're going to see that it came down to the 25.28 area. Rejected that. We're at 25.50 right now. Now, what's so cool about this is we rejected it, and we only had 139,000 contracts traded. That's what you want to see. When we go higher, you like to see a couple 100,000 contracts traded. When you go lower and get a rejection, that's what you like to see. Now, on the gold contract, what we have is this. The 25.24, okay, was basically the top of the consolidation. So the bottom line is that the gold contract's trying to break away from the top of this consolidation. You know, bottom line, the quicker that we get away from this, the more probability that it's going to hold this time. Because what happened in the gold contract since last April, 4 separate times, we have failed at the highs. And bottom line, pulled right back. Notes and bonds. This is heavy, man. Notes and bonds, they want higher price, lower yield. And they're moving, man. And they're moving with conviction. We get the 10-year right now. There she is. We take a look at the 10-year. That's trading 113.27. We have 2.3 million contracts. That's great contract volume. At the spike high that we had a couple weeks ago, that wants to at least get tested. You get a big expansion of volume out here today. The spike high that we're talking about here is the 115.03. Now, if we take this and put this on a generic contract, just to get us a little speculation as what we have going forward, you're going to see, there we go. I'm going to put it on a 20-year monthly so we can see where this next swing point is. And you can see, you know, we're still basically really close to bottoms here. That's this thing, the 10-year bottomed out at 108, 105.10. We're at 113. The next swing here, and this is going to be a big one, is at 117. You take 117 out, and you're off to the races, man. The last high that was generated in this, and we're going back to 2020, no doubt, is 140.13. Now, I certainly don't think we're going to 140.13 because I don't see the aspect of the rates going down so dramatically as we did in, 2015 to 2020. Right now, the 10-year is at 3.78. Now, that's not a bad number, man, because the bottom line is that we topped out on the rate at 4.990. So you can see in the last year, let me see if it's 6 months. Well, it's not bad. In 6 months, we've gone down 1%, So the bottom line is, I suspect, when you look at the Fed minutes, the bottom line, I think September is game, no doubt about that, for quarter point. The market, future market inside of bonds is looking for 1 full point before December 31st. So we very well could get that. And if we get that, you can see when you look at the 10 bottom line, because the 10's trading at 3.7, except that the Fed rate is still 5 to 5.25. So you can see what happens here is that the market is ahead of the Fed. Now, the bottom line is that once they start cutting rates, we'll see exactly what the market has to say. Meaning, are they going to keep pushing forward with higher price, lower rates, or is the Fed going to catch up with the market? That's what we come down to, because you can see when I just brought that back and looked for the last 6 months of the year, the market itself is already doing the Fed's job. That's the reality out here. We take a look at some of the higher volume. Let's go to the dollar, because the dollar, no doubt, is moving the commodity market, moving gold in a monster way. And, the dollar right now is trading at 101. Dollar wants 99, folks. Pretty wild. Stay right there, folks. We got a great guest coming up. We got our man, Mr. Sean Edwards. He's the Vice President, Institutional ETF Strategist, coming right up from Direction. Stay right there, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 25, Nasdaq's up 58, S&P's up 14.5. I'm going to have Sean on, folks, at 3:30. Sorry about that. That was 3:20. 3:30 is going to be coming on. Let's just get over to the NQs and see what's driving these NQs out here today. Inside of the NQ, you got Ross Stores is up 4%. You get Take Two up 3%. Texas Instruments, that's an interesting one. That's up 3%. That's a big one. And then taken away from it, Palo Alto is down 2. That was up big yesterday. It was up 20 yesterday. It's down 7 today. You get Google off 0.5%. Moderna's off 0.9%. So on the buy side, there's no doubt you get bigger percentage moves that are inside a few of these. Let's go just look at Texas Instruments for a second and see what's happening with Texas. So with Texas, the low for the year is 139. The high is 210. We're trading 208, so you're trading right next to the high. I see what happened here. Okay, so now the question is it going to hold price? So let's put this on a monthly, see what we come up with. I see. Oh, this might be a little problem in paradise here, man. What's the price here we got to hold? No, it's holding. 202. Got to hold 202. You're 208. This is going to be pretty wild, man, because what you have here, actually, yeah, it looks to me, this is a large ABC up. Let me look at this for a second. So we did just over a 50% retracement. Let me look at this. So this is, low is 93 of the ABC. So that's, that's only not, 1 second. 93. Oh, yeah. This is a monster one. Oh, make sure I get this right. Yeah, 93 and 202. Holy cow. You're talking 109 points A to B, which gets you 247. 247. This is an ABC structure up to 247. That is one big number. Let's get over the E-mini again. This thing's going, man. If you're playing these, if you're trading these one-day wonders, this is where at 3 o'clock in the afternoon, these premiums are nothing, and you can just hit it. So the SPY just went, since I've been on, the SPY just went from, let me put the SPY up, I get the futures up, but the SPY just went from, oops, 1 second. There we go, whoops. Okay, so the SPY just went, there we go, right there. Since I've been on, the SPY just went from 560 to, well, not that bad, 560.89 to 559.67. Now, if it makes it down, the top of the high volume low is 558.85. The low is 557. So this is going to get really intriguing coming into the close. And the same if we go look at the Qs. What we have with the Qs here, we're going down to the bottom of this thing, man. The Qs, if we take a look at the Qs, started at 482, you're at 482.67, you're at 481. If we get down to the bottom, it's 479. Now the top of the bottom is 480. So we'll see how the rest of this shakes out, but I expect we're going to get it, because what happens is that when you lose that momentum, folks, and we've been in a momentum market, great momentum market. That's the real bottom line. But when you start losing momentum, you lose it in a big way. And the momentum has stopped as about 3 days ago. Intraday today, because of the pop that we had intraday, when you start losing this intraday, bottom line is that you can see the sellers overtake the buyers in a monster way. That's the first part. The second part is that the folks that were buying this morning, I suspect they're going to be moving out just as quick. We get into the, with this dollar down, okay, here, so check out the dollar, because the dollar, this thing is moving quick now. As it's moving lower, we're starting to get consistency with the 300 to 500 tick moves every day in the dollar. You know, if we go back the last 4 days, 4 days ago, we were at 103.51. You're at 101.12. And that being said, the bottom of this consolidation, which we're coming in fast and furious, is the 100.83. Now, when you're coming in fast and furious, meaning wide price bars, folks, into either tops or bottoms, your probability gets much higher that you're going to blow them apart. If that's what we have, and we're going to know this in the next couple of days, this is lining up for the Fed speech at Jackson Hole in a monster way. That's 10 o'clock on Friday. You break that, bottom line, where we're going to be down to the 88 level, never mind 98 level. So the bottom of this level is 99.570. You break that, you'll see something fast and furious, man. That's the bottom line. So it looks to me on what? Let's see this for a second. Have we? I don't think we've broken them. No, we haven't broken the larger trend yet. The larger trend, it have to go below. Let's see, what's that mark at? Where are you? That mark. The larger trend gets broken when you do 100.923. 100.923. You can see that channel coming all the way up. So we get a long way in order to get to that level. There's no doubt about that. We'll see how this baby shakes out. Inside the Dow Industrials, the strength versus the weakness out here inside the Dow. Point-wise, what we have, you got Big Mac is putting 21 positive points, Home Depot 14, 3M 10, Boeing 8, taken away from it. American Express minus 49, Goldman minus 17, Microsoft minus 12. Nothing really heavy there. The rest of these kind of offset themselves. And then if we look at the Dow as to where we are and where it might want to go, this is hanging right at its highs, man. That's the real bottom line. What's so intriguing about the Dow is that the Dow was first to get a high, first to do a retracement, not first to go all the way back. Yeah, it was first to go all the way back. Then the S&P followed, then the Qs. That being said, the heck is this right here? Let me put this up for a second. I just got a huge high volume spike here. But it was a sell. Let me look at this. I don't have it on the diamonds. Yeah, see, this is interesting too. And the diamonds, man, these indices are set up a little bit different because the diamonds do not have that high volume low. They have a high volume low from this morning that's laying out there at 408.920. Is that right? No, 407. Yeah, and we're at 408.62 right now. That's how this baby is laid out at this particular point. We go to the GDX. We take a look at the GDX. The GDX, gold in general, is on a move, and they're on a move big time, folks, okay? There's no two ways about that. Right now, you're at 39.74 on this GDX, and that, to me, that GDX next move is $45, man. But the next move is a big move. We've taken out the consolidation. That would basically been in since, I got to take it this way. Yeah, since April. And the next swing point up there is, okay, 1 second, hold it. The next swing point is 41. Let me look at this, though. 45 is kind of glaring, though. What is the 40? Oh, yeah, there's 45. Yeah, 45's out there. That's glaring. We're going to go, 45 is going to be the number. And what's going to get interesting at 45, folks, okay? Now, you are going to come into some flack when we hit the 45, but guess what? That's 45, not right now. Dow Industrials right now up 15. You get the Nasdaq up 57. S&Ps are up 14. We're coming right back with our man, Mr. Sean Edwards. He is the Vice President of ETF Strategies. You got to love it, man, because ETFs are running this market. We're going to be right back with Sean.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome Welcome back, folks, to Dow. Dow Industrials right now trading up 13. We have the Nasdaq up 58. S&Ps are up 13. Our guest today, folks, is Sean Edwards. Sean is the Vice President of Direction in charge of institutional ET. He's an institutional ETF strategist. Want to welcome our man Sean Edwards to TFNN. Sean, how you doing?
Good, Tom. How are you? Thanks for having me.
Thank you so much for being on. It's a great time to be on. We had the Fed minutes come out at 2 o'clock. We have Jackson Hole coming this Friday, right?
Yes.
You know, we know that there's been, I mean, in the past, 6 months, 8 months, Sean, it seems that most of us thought that the rates would come down earlier than this.
Yes.
So now when we take a look at Jackson Hole, what are you thinking out there, and what are we thinking about rates?
Tom, like you, I've been anticipating rates dropping for my own personal reasons as well. But I think we're all in anticipation to see what the Fed does, what Jerome Powell and the rest of the economists in Jackson Hole discuss, and what the outlook is as far as lowering inflation or lowering the interest rates. We see that, with the recent job data, it looks like inflation may possibly be easing. And then also with the Fed minutes that came out today, we see that there may be, in fact, a rate cut on the horizon. So we may get that result that we want, Tom, pretty shortly. But I wanted to just spend some time just discussing the impact that, potential rate cut could mean for stocks, bonds, and gold, and ultimately share some trading opportunities that traders can look at using to take advantage of a potential rate cut. As we know, stocks have been volatile for the most part, again, as we're, concerned about a potential U.S. recession. Then also we saw disappointing earnings from major tech firms like Tesla and Alphabet. So we see that stocks have been volatile as a result. Despite that volatility and the drop that we saw last month with the S&P, we know that a low interest rate, low inflation environment is typically generally favorable for stocks, and the potential for economic growth and rising valuations with the interest rate, dropping.
Sure.
I'm sorry.
Well, it's so cool. And folks, this is a different situation. I mean, as you're at TFNN, you'll see the direction banners. You can just hit those. You can get right over to the levered ETFs, okay? And I want to talk with Sean a little bit about the bond market, because this is so interesting, Sean. Most of the time, us as traders or investors, you're normally in the middle, meaning, and what I would specifically say is, okay, it's not so hell-bent of going down on rates or up on rates. But in this particular case, I would say that, just like we were talking about, that the anticipation of rates going down have been out there for quite some time. Now, when we look at your TMF, okay, what's so cool about that, and the TMF, folks, is the 20-year Treasury 3 times bull. And what's so cool is that, we know that the market itself has been pushing, the rates down. But this is really important, folks, because if you either hedging or you think that rates are going down, we're at the very beginning of this, which is pretty cool, Sean. Do you know what I'm saying?
Absolutely, Tom. And I would say to that point, what we've seen from an inflow standpoint within TMF in particular, as you mentioned, it is a bull 3x ETF on the 20-plus year Treasury bond index. So the assumption there, if you're investing in TMF, is that you believe that rates are going to decline because of that inverse relationship between bond prices and yields. We see that the contrarian trade has been to, invest in TMF. And so it's been one of our funds that we've seen a good bit of inflows in. And to your point, it's a trading tool.
Yes.
If you are looking to invest in any of our leveraged or inverse ETFs, they are designed to be tactical short-term trading tools. So in a week that we have upcoming, with the Jackson Hole meeting, with the Fed meeting today, this is a tool that you can look at utilizing to take advantage of, the interest rate movements in the short term.
Right. And, when we start talking interest rates, folks, we got to start talking small caps, because the small caps themselves hadn't been moving until about, 3 or 4 months ago. And then you talk about moving. And I remember specifically, Sean, at the beginning of all these leveraged products, from Direction, the TZA and the TNA, they were like, everyone traded them. And what I'm watching is that the amount of calls that are coming in again. Now picture, what I just said there, I'm going back like 10 years. And then,
yes, absolutely.
Yeah, and then what ended up happening, literally about 2.5 months ago, people have a real interest in it again. And what that has to do with, folks, it has to do with the aspect of the rate cuts again, so there's
absolutely. Absolutely, Tom, and I would second that. I will also say you saw a rotation into small caps again when you're thinking about the run up in the stock market as a result of the over concentration in those tech mega cap names. So
yes.
You also saw rate cut conversation. You saw the disappointing earnings within those mega cap names. And again, within, the small cap index, TNA and TZA, it tracks the Russell 2000. So again, if in fact we do have lower interest rate environment and you are looking to trade that low interest rate environment, small caps can stand to benefit.
Yes.
So some trading opportunities there for sure on the horizon. And again, we provide tools that, are bullish or bearish. So if you don't think that, rate cuts are imminent, you can look at TZA, and that's the bear version of that pair. Again, give you an exposure to small caps, effectively the Russell 2000.
Exactly. Now, we got to talk gold, because what has happened in the gold market, folks, for some reason, gold has been on the move. But what has happened in the ETF structures is that there hasn't been as much buying in the ETF structure as there has been in the past. Now, we'll see whether that changes, Sean, because it's so intriguing that we have the contract itself hitting all-time highs. And, of course, you get some amazing products there. We're talking about the Nugget, the Dust, the J-Nug and the JSTD.
Yes.
And if we can talk about that a little, that'd be awesome.
Sure. And to your point, within the market, we've definitely seen gold approach all-time highs, and it looks like it may even, from an analyst standpoint, rise above its current all-time high and hit 3,000 within the next 6 to 12 months. Yes. And as you mentioned, we do offer traders the opportunity to invest in gold, but it's gold miners. So It's not actually the commodity, but gold mining companies. So the ETFs here gives you exposure to an index that's related to gold mining related equity companies. So again, if you are looking to trade gold miners, you can look at using Nugget, NUGT, which is the 2X Bull ETF, or Dust, which is the 2X Bear ETF.
Absolutely amazing. What an education, Sean. Thank you so much. Look forward to having you again.
No problem, Tom. Thanks a lot. Thanks for having me.
Thank you. Stay right there, folks. Come right back.
An Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direction's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LarryAUG24 at checkout to save $50 off your first month. See you there, Tigers. This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow's up 31, Nasdaq's up 56, S&Ps are up 14. Let's go over here. Let's see what we have happening here. You got another bounce out of here, so let's see where we went here. Okay, so pull this back. This would be wild. Nope, we didn't make it to the highs or the lows yet either. We made it down to, let's see, what? 870. No. 832. And the high of the low is 824. We're not done yet, though. The reason being is that if you're watching Tiger TV, you can see that bar, that volume bar, it expanded. Not a lot, but it expanded. Well, what you do with this, too, by the way, folks, when you start getting this intricate, meaning getting in this rabbit hole pretty dramatically by 10-minute bars, you see the next 10-minute bar, how the low is 92 under contracts. The next bar is 5,200. That's when you know you're going lower again. That's pretty dramatic. 92, 52. And then I always tend to match them up. That's all I do all day, actually, is go back and forth between the NQs and the ES. And what I try to do is match, well, no, what I do, and I try to do, is match them up, and just to make sure that, almost 99% of the time, they both move the same, meaning if it's a high volume low, there's going to be another high volume low. But just in case there isn't, then, and in this particular case with this, E-minis, definitely it accelerated. We did 20,000 contracts, and then we tried to go higher with 10,000. Yeah, that's a market that wants lower price. That's pure supply and demand. And particularly what does end up happening. Now, there's no doubt that you, me, or someone could come in and say, okay, give me, 10,000 contracts and bang, blow that down or up. That you see that happen. This is where when we were going to hell in a handbag, you see that happen a lot. Okay, that the large players, volatility-wise, they cherish it, and you should cherish it. Once you understand how to trade a high volatility market, folks, you will dig it. Because what happens with a high volatility market is that it's not that you're a bull or a bear. It's that the moves are so spectacular that one of the keys is that you're not staying in positions long. I mean, you're getting in and out of positions all day long, because what ends up happening is that as the bulls and bears are fighting, you get 20-point S&Ps, 20 handles up and down in 2 seconds. So you get your handles, take your handles, you sit there. If you want to flip the position around, you can do that, or you sit there and wait, meaning if you're a bull, you're going to wait for a dip. If you're a bear, you're going to wait for a spike higher, The volatility, the reason that, traders say that they love volatility is that because the middle, you're not looking to get the high and not looking to get the low. The middle, when you have a range of 70 or 80 S&P points, okay, you're going to get it, man. And normally what ends up happening, not the first day on a downdraft or an updraft, basically, is a highly trending market. It's the couple days after that where the bulls and the bears are real nervous. The bulls, of course, are nervous that we're going to go lower. The bears are nervous that they're going to have a short buying streak and, blow up topside, which does happen all the time, by the way, okay? If you're selling on the way down, you got to expect, that you're going to have bounces that are extraordinary. And the reason, but one of the reasons I'm bringing this up is I suspect we're going to be getting real close once again to having this high volatility come in the marketplace. I don't think it's, before the minutes came out today, I was thinking that, okay, maybe Friday's going to be it. But because of the minutes really are saying that, hey, listen, a few of the Fed governors already wanted to do the quarter point. That's telling me that we're going to go a quarter point. And I believe it's the 18th of, let me just check on this. It's the 18th. Yeah, it's the 18th, 2 o'clock on the 18th of September. That's when the announcement comes out, 2:30, the news conference comes out, and then, of course, what the market's going to be looking for is this. Since I've been in the market, which has been like January 3rd, 1980, okay? The reason I know it's January 3rd is that what had happened is that I was down working out, and I was just looking at the Dow for some reason. It was like just at 800, 808 or something. Anyway, to make a long story short, it's that far. And every single time that either rates are going down, folks, down, or rates are going up, there's consistency in the Fed. What ends up happening let's see, in the 94 area, what they had done is this. They went down, then they went up for a couple, and then they went all the way down again, meaning, a couple meetings, okay? That was about the only time I've seen since 1980 that the consistency, if they start going down, they go down for a long period of time, and then that's it. When they go up, they do the same thing. So I expect what we're going to have here is that you will have at least, well, here, let's put these back up again. This would be pretty cool. So we can see the market calendar. Okay, so the market itself, when I say the market, the bond market, is projecting 1 full point before December 31st. Now, we only have 3 meetings. We have September 18th, November 7th, and December 18th. So maybe it's only 0.7%. I mean, not 0.7, 0.75% that they go down. We'll see where it shakes out. Or do they go down 1 full point? Because on one of these meetings, they go down 0.5 point. Because what we are going to have on the 14th, I believe, of September, they're going to get one more jobs number. So they're going to have one more information package on what's going on in the jobs market. The aspect of inflation's still coming down. My take is that what you're going to see, however, is that because the dollar's going to hell in a handbag, prices are still going to have a hard time coming down. Because the bottom line is that the lower that the dollar goes, the higher that commodities go. Commodities we buy every single day. So it's going to bring higher prices inside of the commodity market. Now we'll see if that can do it with the oil market. The oil market, there's a lot of oil out there. I remember when I started the gold report, which was in 2000, right? Is that there were so many books that were out there that were peak oil. Everything, when we were doing the gold shows, the peak oil guys were there at the same time. It's like, wow, peak oil, man. Now, picture this. That's 24 years ago. Peak oil, right? There's oil everywhere, man. That's the real bottom line. And, right now, when we take a look at, let me go GC, CL1. I'll put up the generic one. Okay, so if we look at generically, And that just means we're tying the contracts together. We're at 71.96. It's at the bottom of its consolidation. Come on, come on. I say, oh, it's not at the bottom. It's the bottom of this consolidation is 63. We're going out of 63. Stay right there, folks. Come right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's up 45, Nasdaq's up 84, S&Ps are up 19. Let's go to Vista Gold and take a look at it for a couple of the Tigers. We own Vista Gold, and I want to show you something right here, because what's happening right now is that this is on an ABC up run, and 75 cents is coming at us. And let me show you this, okay? So we just, as I'm on, and thanks for, Mike, for giving me that text inside the Tigers Den. Bottom line is that you're taking the swing point out of 62, right? And we're going to have the volume on a weekly. It's going to be coming in about 2.8 million on the weekly, and we need 2.3. Now, what's so cool? So check this out. This is an ABC up, and the price projection is 75 cents, and 75 cents happens to be the next swing point. Okay, so the bottom line is that we're taking it out today. We have the volume. Your next swing up there is at 75. We take 75 out, and then you're going to be at $1.32, $1.12 rather. That's how this thing is shaking out right now. And it has the volume and the force behind it. So, it's going to get really intriguing here with a lot of these gold equities to see exactly how much juice they can get in them, because these numbers are big, man, and the dollar just continues to go south. And the further and faster the dollar goes south, the faster that you're going to see the gold contract go topside, as well as silver. If we take a look at silver, silver's picking up some steam, man. You take a look at silver right now. We're at the $30 level. And, you know, the last high, let me pull this, let me see. I'll do a generic here, too. What happens with the generic ones, folks, is you can bring them out much further because the futures expire every 3 months. So what happens is you need the generic ones. Okay, so we're at $29.99. Your next stop is $31.75, and the high thus far is $32. Now, we put this on a monthly. Oh, this is nice. We already, oh, I see we're already doing the test. I love it. Okay, man, we came up, we already came back. Yeah, this silver, man, the next move on silver is somewhere around $35, and we're at $29.50. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Have a great one, have a safe one. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Go get him, folks.
Building wealth